Today you are going to talk about get your business loan approved and what is the bank looking for. Well, the reason I can talk about this is because I've been working as a credit analyst for 8 years. And my background is the following. I have graduated with a master in finance, and I worked for major American and European investment banks such as JP Morgan, Citigroup, UBS, and most lately, the rating agency Moody's. So what do I do as a credit analyst? My goal is to find out what is the probability of default of your company, which means what is the probability of your company not to pay back your debt. How do I know it? I simply analyze your financial accounts. What is my input for the bank? Well, I give my recommendation whether you can get additional funding based on my analysis. Today, we are going to focus on three main points: how to assess your performance based on your financial statements, what is your financial strength, and what is your debt repayment capacity. First of all, if you are going to see a bank to get a business loan approved, you need to make sure that they are happy about three main things. One of which, is your performance. What does it mean as a banker? Well, I want to know how much money you make, if you're profitable, if you can control your costs, and I'm going to find out all of this by checking your income statement. This is an example of your profit and loss statement, or in other words, your income statement. So what I can see from year 1 to year 2, your sales have increased by 16%. What does it mean? Well, you're doing well. You have managed to have higher revenues, maybe by acquiring additional customers or by offering new products. Then I'm going to ask myself, how did you do with your costs if you have a good cost management? So here I see that you have increased your cost of sales by 10%. So what do I tell myself? Well, even though this person, or this company rather, has increased its sales by 16%, he managed to control his cost because the increase, which is by 10%, is lower than the increase in sales. So as a banker, this is the conclusion I'm going to have. This person has good cost management. In terms of your gross profit, you made a strong increase by 18% from 250 to 295K. And what happens to your overheads? Well, it increases as well, but slightly by 5.7%, which is okay. So I'm not that concerned. Overall, your net profit has increased tremendously by more than 40%, some 46.7%, and you improved your performance by, a large amount, from 75K to 110K. So this is what I'm going to check when I'm going to look at your income statement. Does this company perform well? Well, my answer is going to be yes. It has increased its sales, it has good cost management, and I have a steady increase. So I'm happy with that. Then I'm going to focus on your financial strength, or rather financial stability. What does it mean? Well, I'm going to check what are your assets, which means what you own, and what your liabilities are, which means how much you owe. So I'm going to compare what you own, which is in your assets, versus what you owe in your liabilities. And all of these are going to be in your balance sheet. This is an example of your balance sheet. First of all, it is important to know that in a balance sheet, your assets needs to equal your liabilities. Your fixed assets here are at 5K out of a total assets of 65.2. Well, you don't have much fixed asset compared to your total assets. In fact, what I see is that your main item in your assets is your debtor, which means your customers, and you don't receive your money straight away from them. You give them some credit because they still owe you. They haven't paid you cash yet, otherwise it will be in the cash section. So to me, what that it means, well, I'm going to check how many customers you do have and what happens if, your customer doesn't pay you. It's going to be really bad for you because, you know, 50 out of 65 is quite a large number. So this is something I'm going to inquire. How many customers do you have? Do you have a good relationship with them? How long do you have um, uh, your customers? Do you have a long history with them? Are they trustworthy? Because it's a large percentage of your total assets. On the other hand, on the liability side, well, what are the biggest items? Well, you have some suppliers that needs to pay you still, and I can see that you are nicer to your supplier than to your customers because they owe you less. Your supplier owe you less than your customers do. Um, Second of all, I'm going to check in terms of your loans. Well, what I can see here, you have some loans, which is 5K. Some of a draft. Okay, fine. You've made consistent profit because your P&L, your profit and loss reserves are quite big. So you have made consistent um, growth, profits over the years. I don't know how old is your company, so this is something I want to know as well. And you started very small. You started with 1K in terms of share capital. This is not much. So I can say, this company did really well. Capital has become stronger because of the profit and loss reserves, which is the accumulated profit, your retained earnings that you've kept. You didn't use it. I'm not sure how much you've used for reinvestment purposes. On the other hand, I'm going to also find out if you need more debt. But here you have 5K of debt out of 65.2 total liabilities. So I can live with that. I'm not overly concerned if you come to me and you ask me for second loan because you don't have much as in terms of debt. Now that I've seen your performance, I see that you have a stable balance sheet. I'm going to check whether in fact you can still pay me back, after all of your uh, in terms of cash, because balance sheet shows me what your the fundamentals, your financial statements look like, but it doesn't tell me how well you manage your cash flow. And this is something I want to find out in your cash flow statement. So, and I want to find out if you can pay back the bank, if you have refinancing needs, and if you still have money left after all your bills, taxes are paid. This is an example of a monthly cash flow statement. Usually, if you can keep it annually, it's better because the more details I will have on your cash flow statement, the more information I will have on how well you manage your cash flow statement. The cash flow statement tells me when you receive your cash sales, how much has been taken out to buy your furniture, to buy your you know, uh, gross goods, to buy your stocks, to pay your rent, and all of this. And after all of that, if you still have money left to pay back your debt and to pay back the bank, so if you still have some strong cash flow at the end, so I'm still going to be happy with that. Here, month 4, I start to feel more comfortable. Month 5, I'm even more satisfied. So if you still have cash left, I'm a happy person as a banker, and I know I can trust you as a banker. At the end of the day, it is mostly important to give the right impression. What do I mean by that? Well, your bank will be impressed with you if you show consistency and stability in your financial statements. If you show you have expertise in your business, you know what you're talking about, if you show transparency, and if you're forward looking. Most importantly, you need to know what are the risks of your business and what are the mitigants. In other words, if there is any issue in your business, if you have thought of a solution. So be warned that At the bank, they will try to find where your weaknesses are. And you, whenever you will provide them with a solution because you have thought about it beforehand, that will show that you have a forward-looking view and that you're in control of your business through your finances.